Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant with me, my colleagues Surabhi and Nigel. Guys, morning.
Hi, morning. Folks. Good morning. A bit of an AI scare all over again. It's one day up, one day down in the US markets, right? That's how it's playing out.
Well, that's right. And we haven't been part of that AI party. So, I don't know. Maybe it's time. India's time to outperform is here. And I think the market's actually been looking quite good, right? Not too bad. Hopes of that trade deal coming about. Yesterday's close was pretty good. I guess November is when we have those fresh all-time highs.
You know, this is not new. We've been talking about this lack of AI here.
Yeah.
For months now we've been talking. And, now people have started to say, as I think yesterday, Amish and others from conferences that we've spoken to, that if this AI trade fades, we will start to get some money. So there's a new term.
The anti-AI trade.
AI trade.
And we are the anti-AI trade. So let's see if it really starts working or not.
Well, let's just start from the beginning, right? And, so yesterday morning when we started, Monday morning that is, I started with Friday's price action precisely for this reason. So Friday, US markets did not sell off or anything by close. They recovered. But we started with essentially telling you that it's looking a little wobbly for the last 4 or 5 days now. And Friday was no different. Nasdaq futures sold off 2% and then came up. S&P was up 1.5% from the lows. There was a continuation of that wobble yesterday, last night as well. So equities in the US off as tech stocks struggled. Nasdaq was down 0.8, Nvidia was down 2. And of course, Nvidia reports numbers later tomorrow and we'll react to it on Thursday morning depending on what the US does. Now, you can blame all of this on Nvidia, but I don't think you should. But the point is it's an important conversation, analyst call, post the earnings, etc., which the market will wait and watch. There are already so many stories around Nvidia and whether that half a $1 trillion investment number will come up, whether Jensen Huang will answer that, etc., etc. So it's an important one which markets are kind of fixated on. The S&P was down 0.9% by close. It's breached its 50-day moving average. So we'll have to see if there is more pain in the near term or if we quickly stabilize, because in a day or two, if you stabilize, then this just remains, what it has been, which is just a wobble. Now, the macro markets, not very much. The 10-year yield was down 2 basis points. Oil prices, which jumped up 2%, were down 0.5% or so, 64. You had some macro data, which is empire, manufacturing and construction spending, which beat expectations, so not very much there. Apart from, as we said yesterday, Walmart, Home Depot, Target numbers also this week, earnings this week, and I think they'll talk to the strength or the lack of it amongst the US consumer. And of course, with regards to India-US trade deal, which is the next trigger here, which everyone is waiting with now that the Bihar election is out of the way, the White House economic advisor making that comment, we'll play that soundbite out a little bit later, very close to reaching deal with India. And we'll play out that full soundbite, but that essentially what was the crux of it. Now, once earnings season is behind us and lots of promoter, early investor block sales are back on the table. Today, just today, there's about 7,000 crores worth of blocks which are happening. Some 4 companies, and we'll get you sort of data on that. One of the 4, which is Emphasis, our colleague Vivek reported on yesterday itself. But this is, I guess, going to be a constant feature. Lots of supply away from the IPO market via these blocks, etc. as well. So just to tie in the levels, Nifty, 26,100 is the upper end of the range. We'll see if we are able to get to it. Today, of course, the start is lower. Support is 25,798. The 20-day, which has actually moved higher a little bit. So that's the trailing kind of level on the downside. Now, the Nifty Bank saw a sharp move, 0.75% gain. And I'll show that chart later. It's a rising channel. You've tested the lower end of the channel. And logically, the upper end of the channel is 60,650 levels. So that's the target for the Nifty Bank. And support here is, the 20-day moving average, which is 58,082. So these are numbers up on your screen. Gift Nifty I think, as I said, indicating a slightly lower start, 60, 70 odd points lower. And then we will pick it up from there. Nigel has walked across and he's standing by with the F&O positioning and stats. Nigel, over to you.
Well, yesterday's close actually was quite heartening. And the last couple of trading sessions, the price action has been pretty good. Remember, today is the weekly expiry for the Nifty, so that will add an element of volatility as well. But as of now, you'd have to say that the bulls, they appear to be in control. Looking at the flows yesterday, well, the FIs, they turned buyers. So yesterday, both you had the FIs as well as the DIs on the same side. Institutions were net buyers in yesterday's trading session. What about the FIs? Well, on the index futures, they went ahead and they added longs as well as shorts, around 2,000 contracts apiece. This market is still net short with close to around 88% of the positioning on the short side and 1.6 lakh contracts on the short side itself. Besides the futures data, well, the heartening factor was yesterday there was good amount of put writing as well. And that's telling you that the base of the market is moving up gradually. First, we're talking about 25,000, then 25,700. Just in the near term, the 25,500, 25,700 mark appears to be a bit of a support zone. And you should get some options data that comes up for you on the screen as well. The 26,050 call, fair bit of open interest built up, the premium at around 50 rupees. And on the downside, you have this 25,900 put, massive open interest built up, and the premium that came down to close to around 30 rupees or thereabouts. So just punching in these and looking at the technical levels as well. In terms of a range you're looking at, well, on the downside, support comes in at this 25,800, 25,850. Why do I say that? Options data indicates that, and even the 20 DMA is at around the 25,800 mark. Resistance, though, comes in at around 26,100. Going by the options data, because the premium on the 2650 call was at around 50 rupees or thereabouts. The Nifty Bank, I've been making this point for the last many trading sessions. If the markets need to move up, the Nifty Bank needs to lead its way, and that's precisely what it's been doing. It's trading well above those averages, and it's in a bit of a breakout phase. If you want to look at a reference point, the 20 DMA, which is at around that 58,000 odd mark. There are plenty of blocks that will be taking place with promoter selling, PE selling as well. But rate gain is one of those few counters where I saw that, the stock has gained a good amount in the last 1 month or so. They came out with fairly good numbers, did some inorganic growth. And surprise, surprise, the promoter entity going in there and bought close to around 1.5 lakh shares on Friday, which was reported yesterday. So that's a good sign, right? When a promoter comes in there and chips in this entire market where you're seeing a lot of supply, a mild promoter buy. I'll keep an eye out on rate gain as well.
Okay, all right. Nigel, actually, since we're talking trade, and Prashant, you alluded to what Kevin Hesed said yesterday. In that context, should mention that our trade numbers came yesterday, and they definitely are showing that it's a wobbly picture. Nothing new for the market. It's pretty normal. We would expect. Trade deficit, the India trade deficit has gone up by $10 billion in October. That's one, because gold imports have shot through the roof. Obviously, the festive season, Diwali, so on and so forth. And the second, obviously, exports have contracted. Merchandise exports are down almost 12% in October. And areas like textiles and ready-made garments, there's contraction there, about 8%. So obviously, this is a pending issue for the real economy, for our export growth. In fact, let's listen into what Kevin Hesed had to say. He did give some indication that, they also want a deal to be done. But is there clarity? Are timelines in place? Well, right now, it's anyone's guess. Take a look.
What's going on with India? Just as an aside, in terms of a trade deal, we've been so close so many times. Were we ever close?
Yeah, we were for sure very close. I've spoken to the ambassador, and we've had visits, and I think that it's a complicated situation because of the interaction between what India does with Russia and what India does with us. And so I think we're still quite hopeful, but it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
Okay, so that trade deal needs to get done. In October, our trade deficit stands at $42 billion. That's a big number. Anyhow, for the time being, let's move on to the equity call that we're getting for the morning. We actually have two calls today. One is coming from Mahesh Nadurkar of Jefferies, who says that the September quarter earnings showed a sequential uptick in growth after 4 quarters of decline, with the early festive season driving revenue growth to a 10-quarter high. Sequential improvement in growth was seen in most sectors, with lending financials also recovering after 2 quarters of earnings decline. He says that the sustainability of the GST-driven consumption uptick remains key for stronger earnings trajectory. MSCI India's earnings growth for FY26 now stands at 10%. Meanwhile, Rhythm Desai of Morgan Stanley says that the policy has pivoted, supporting a strong recovery in nominal growth, which should take earnings growth out of the mid-cycle slowdown experienced over the past 12 months. Relative valuations are consistent with improved forward performance. He says FPI exposure remains the lightest in history, and the structural domestic bid is intact. He adds India's long-term story has been reinforced with a slew of reforms. Hence, they believe that Indian equities are all set to reverse their worst performance relative to EMs in 31 calendar years. So, yeah, that's the extent of the India underperformance. But Rhythm says it's about to reverse.
Okay, well, lots of opinion, right, which is coming through. We'll get you more along with that one.